What up, Crypto Nation? Oh, Friday indeed. Look at this. Woo. Show starting soon, I might say. No, it ain't. Show starting right now. Happy Friday, everybody. Hope you're feeling great. I'm feeling saucy today. Look. We about to get into some numbers you gonna like. Boy, you gonna like it. So check this. Come on now. Come on. Hit me. You're going to see what I'm talking about. Bitcoin up 1.2%. Let's go. Ethereum up 2.1%. Let's go. People who are watching XRP, 2.3. Doge crushing it, 4.3%. Just a little Doge. It's whispering, but Solana, 6.9%. Polkadot, 4.5%. And Litecoin, 19.8% up. 19.8% up for the day. You hearing that? You hearing that? Like, we've been talking on these charts. I've been telling you, girl. I've been telling you. This, by the way, this isn't like we're not done yet. We just popped off. That's what I've been saying, right? Polygon up 4.9%. Let's go. But look, all I'm saying is I've been telling you to pick up a bag of Litecoin. Did you do it though? Did you? I don't know. Look, we'll get into some charts here, shall we? Let's do that. Look, I'm feeling right today. You got to know. So come on now. So we got Bitcoin, right? Bitcoin's looking nice. I don't know why my auto's hiding. What? I don't know. Maybe if I just refresh it. Maybe? Am I tripping? Something. Where'd he go? I don't know. I'll just do it this way. Whee! I'm looking for my auto button. It's like not there. But I don't know. But look, all I'm saying is Bitcoin, we're in this nice accumulation zone. We're testing this level where this big band is right here, right? And I'll make this not stupid size again. There you go. So here's what we're paying attention to on Bitcoin. We're testing like where we dipped a little bit here. We're testing these levels here. This resistance here became this resistance, and we're testing it again. Okay, we got to really break through this resistance in order to see Bitcoin do something around 40K. But we'll see what happens. I mean, money could drop into the whole space. I think October is going to be really exciting for us because we got like the SEC, the Coinbase is going to be resolved by that point. We got certainly in August before October, we got the whole Litecoin halving going on, but a lot of a lot of weight in favor of Bitcoin because of ETFs is going to push the money up. Question is just, are we there yet, or is there a little bit more FUD before we go to like 42, something like that? But looking over here, Dogecoin, gotta love her. Dogecoin is in this big triangle. Okay, it has been, it will be for a little bit until we pop out of it. So we hit these once we had confirmed bearish action, head and shoulder situation. We have this confirmed wedge, and right now we are just below that accumulation support on the wedge. So it's actually a really nice time to pick up Dogecoin, according to technical analysis. So you see how we're below. Um, I gotta make this not like bad on screen. Hold up. Holla. So you can see how like we're underneath this support level. That just means scoop it, right? Easy bags, easy bags. And moving up to August 2nd, that's the Litecoin halving, where Bitcoin uh miners typically have Litecoin ASICs as well. Historically, and Litecoin's on the script algorithm. Doge is also on script algorithm. So they'll say miners have a lot of Doge and a lot of Litecoin. And so whenever Bitcoin or Litecoin pop off, people typically move their money over into Dogecoin to get it off the exchanges for cheap, because it's like a few cents to move like a few $1,000,000. It's crazy cheap. So and it's fast too, and it's backed by proper proof of work. There's no funny business going on, even though Doge is a meme. So it's good tech despite the silly name. Just know that this is likely to pop off once people take profits off their Litecoin. And Litecoin, real talk, really is the bell of the ball right now. We saw this big old dilly bar. Hope you go into Dairy Queen, because we popped out of that band. We've been tracking for so long, right? We've been tracking Litecoin being inside this, descending. And I told you, I don't know when. It could be give or take. It's going to be right around here. We're going to see some big pop offs, and this isn't even our final form yet. You think that's done? Please, like, yeah, it's probably going to rock and roll a little bit. It's probably not just like one big dilly bar and we're done, but the show has begun, I think, is what you need to know. The show has begun, and I've been saying it will, and it is. If you bought, look, if you bought when we've been saying this whole time, and I've been saying this whole time, I love you. That's 43% you would have made in like, I don't know, like 2 weeks. So you can't always get what you want. But all I'm telling you is that, like, I do my homework and I'm telling you good information, and if you act on it, uh after doing your own research, who knows, maybe you might be in an informed position, right? And here's kind of what it looks like. It wasn't just like one tip off. It was like one run up and then did it again. And now it's retracing a bit because you know, people in the United States at least are looking at their accounts first thing in the morning, like, damn, and they're just take a profit. Like, watch me now. But I think it's gonna retrace a little bit. It's gonna come back up. I don't know what these levels look like yet. I need to do some deep technical analysis on this, but either way, Litecoin, Liddy, Litecoin. Just watch, those profits are probably going to drip over to Dogecoin. So even if you miss this pump, wait for it to retrace a little bit. Maybe you can pick up some more Litecoin before it pumps again. No guarantees it will. I'm pretty sure it will. Let's just analyze real quick before we move on. Like other times Litecoin has pumped. What do the patterns typically look like? Let's analyze that, because history doesn't repeat itself, but it rhymes. You know what I mean? So like, we'll look at these examples here. These are day candles, mind you, right? You can see how typically we'll get in nice and close. Come here, girl. I love you. I love you. So if we're looking at the date range, and that's a really useful analytical tool, you look at date range here. You can say, okay, once we had confirmation that we popped out of this trend here, how far until we hit peak? 17 days. So typically, it looks like these run-ups are like 17 days. Now, what about the last time we had a halving, right? Well, we got that marked up with these yellow, they're gold. I'm tripping. They're gold. Is that right? Yeah, they're gold. And the yellow is the days before. Come on, we're gonna zoom in. We're gonna zoom in. And I made it look all stupid because I zoomed in bad. I'm telling you, my tools are attacking me right now. So over here on Litecoin, when we had this other halving right here, the run up prior to is really what we want to look at. You see this big old dilly bar? That's pretty similar to what we got going on right now. If we look at a long position, you know, yeah, in one day it was like 58%, or no, one day it was like 26, which is typical. Looks like, and then the next day, what was that? It did another 28. So it looks like 20 or something is what we're likely to see when we break out. That's what we're seeing right now. So it's not to say it's going to be the exact same, but it is going to rhyme a little bit. It's going to rhyme a little bit. And so the point being, we had green candle 1 day, 2 day, 3 day, 4 day, 5 day, and then we saw retracement. And so over here we saw, I'll zoom in a bit more. We had 1, 2 leg down, 1, 2, 3, almost 4, because it looks like it had a spinning top situation. And then 1, 2, 3, 4. So we tend to have 2 to 4 day runs up, it looks like. So yeah, we got some time probably. We're gonna see probably some retracement on Litecoin here. But the chat's popping off. Let's take a look. Yeah, JV said good morning. What's up? LTC baby. Get that purple. Happy Friday. Don't sleep on it. And I feel that vibe. Appreciate you. Just Bossy, what's up, girl? Good morning. Cobug, what's up? Good morning. Indo, isn't there about to be a launch of tokens projected to be dumped into the market tomorrow, July 1st? A bunch of token projects. I don't know. I mean, if you can find an article, we'll read it. Look that up and just drop it in chat, and I'll take a look. Doge standard is the best standard. Yeah, no shit. Bull season. I don't know that we're necessarily bull season yet, but it's starting to tip that way. The news, like you probably noticed, the news is less FUD and more like it just feels more strong, right? Yeah, you're back on your bullish. Litecoin is not following its halving cycle. I don't know that I totally agree, Eric Arneson, but appreciate you being on this morning. What's up? I think this is about ETFs. LTC will be one of the few who are allowed. So I agree with you in that, but I think that the timing is intentional. I think the people doing the ETFs have big bags of this stuff, and they kind of wait to make sure some multiple events intersect so that their money looks right. Personally, that's what I think is happening here. But look, just pay attention to get your charts on your computer screens up on Litecoin on the like 15-minute and just watch it today. That's all I'm saying. We're at resistance right now. You can see. I mean, really, let me just draw that in. This is the lid right here. We're seeing these two dots, and yeah, it extends a bit above that, and we'll turn this baby red because we know that that's resistance. We are 5 months behind on the halving cycle. No. I disagree, homie. Look. If you really think that, let me show you something. I don't know what you mean by 5 months behind, but August 2nd is the halving right here. And typically 8 weeks prior to the halvings, we have a big pop off. Sometimes it's like 10 weeks, sometimes it's 6 weeks, but it's right in there around 2 months prior to the halving that the price action typically has some big movement. Now, I agree with you. We have not broken out of our precedent resistance in this short here. So, um, no one's going to throw shade at you if you take profits down, wait for a little retracement. But all I'm saying is, I personally think this is a breakout. I think we broke out of our wedge. So, uh, either way, not financial advice. You do what you're going to do. But all I'm saying is, we analyze this and just pay attention. You got some opportunities here. I really do think people are going to take these profits once they think they're done, and they're going to start throwing them over to Dogecoin. Yeah. Yeah, no, there's more stuff than just the halving happening right now. I totally agree with that. Yeah. But really, I think people are going to be moving these profits over to Dogecoin and over to Bitcoin. So, um, a lot of times you can kind of predict that stuff. So, I'm not telling you what to do. All I'm telling you is that I have bags of Litecoin, Doge, and Bitcoin, and they're kind of tipped in a way that I can cascade these profits. So we'll see what happens. We'll see what happens. Pray for wise decision making here, right? But yeah, exciting morning, really is. Let's go ahead and get into some stories, shall we? Let's talk about the news, because on Crypto and Coffee, we drink about coffee, but we talk about crypto, and so it's that time again. It's that time. So yeah, that's never bad advice. Like, just stack DCA, Bitcoin, stack sats, Satoshis, right? Stack sats, yeah. So I'm like derping right now. Hold up. Hold up. I want to tell everyone, thank you so much. I appreciate you for hanging out this morning. I do this because I love you and because I love doing this. So, UK bill to regulate crypto assets passes into law, offering a rocket boost for the economy. Let's take a look. Financial Services and Markets Act 2023, a UK reform bill that recognizes cryptocurrency trading as a regulated financial activity, received so-called royal assent on Thursday to make the bill law, according to a Thursday press release by the UK government. The law recognizes, these are fast facts, I don't do that unless that's all there is. Sometimes they do this where they drop news, but the article is just like bullet points, but that's cool. So the law recognizes what it calls crypto assets as cryptographically secured digital presentation of value or contractual rights, and as regulated financial instruments, products, or investments. Interesting. So this law specifically calls cryptocurrencies cryptographically secured, that's true, digital representations of value. Oh, I see what they're saying. They're saying like the cryptocurrencies themselves represent an idea of value or a contract to rights, like an NFT. This is a good definition. That really is. And as regulated financial instruments, products, or investments. Okay. It enables the regulation of crypto assets to support their safe adoption in the UK, wrote the UK Treasury in the press release, calling it rocket boost for the economy. So hold up. It enables the regulation of crypto assets to support safe adoption in the UK. So basically they're saying like they're going to have rules on exchanges and what taxation might look like on these assets, I think is what they're saying. Royal assent is a procedural stage that follows lawmakers' agreement on a bill, making it an act of parliament in the country. The crypto bill received approval from the upper house of parliament on June 19th. The formal recognition of cryptocurrencies in the UK represents a significant advancement for the broader crypto industry, said Jeff Feng, co-founder of blockchain developer CE Labs, in an emailed comment. It serves as an acknowledgement of the growing legitimacy of digital assets, something that is becoming increasingly crucial as countries worldwide compete for supremacy in the crypto and tech space. Word. You got this bad habit of crunching ice. Don't do it. The move indicates the UK's ambition to become a hub for crypto innovation, according to Fang, who said the UK might be positioning itself as the Singapore of Europe when it comes to crypto, aiming to attract entrepreneurs and compete with other crypto-friendly European countries. I love that England's, doing this in the EU. I love it. They're like, yo, if you guys are going to crack down, we're going to crack up. That's what's going to happen. Um, on Wednesday, the Law Commissions of England and Wales published recommendations to reform and develop laws related to digital assets, which argues that digital assets, including cryptocurrencies and non-fungible tokens, or NFTs, should be classified as a new category of personal property. Dude, how funny is this, though, that like the UK is doing what the United States should have been doing, but because we got Jerry Gensler and some other bad actors in place, the UK's beating the United States on this. Really? Come on now. I don't get that. But either way, this is cool seeing that the UK is taking this serious. Maybe that'll be a shot in the a shot across the bow to the United States. Like, yo, dog, pay attention. Maybe. The US dollar weaponization is sending countries scrambling for alternate currencies, says IMF official report. And this is what it actually looks like if you stack money on a sunset. So now you know. The International Monetary Fund. This is tiny. Come on, say something, people. If it's tiny, let me know. I'll make it bigger for you. That's what she said. International Monetary Fund executive director for Russia says the West's decision to lock out certain countries from global payment systems is forcing many nations to look for substitute currencies. Alexei Mosin, that's a cool name. Sounds like a band. Yeah, El Salvador don't care. Big hair don't care. They don't care. Alexei Mosin says the world has witnessed how the United States and its allies used economic and financial sanctions to penalize Russia for its war in Ukraine, according to a new report from Sputnik. According to the IMF official, the use of sanctions as a stick is creating a more divided global economy. The blatant use by the West as a weapon of international trade, finance, as well as the dollar and the euro itself, make the fragmentation of the world economy not only inevitable, but also irreversible. In March 2022, the West imposed foreign sanctions that froze about $300 billion worth of Russian reserves. The sanction also cut off Russian banks from SWIFT, a cross-border payment system dominated by the dollar and the euro. Mosin says that the weaponization of the dollar is pushing a number of nations to bypass the American currency when settling international trade. The Americans themselves have created a situation where the search for alternatives to the dollar has inevitably started. And now we see how it's happening. We see that Iranians, Brazilians, Saudis are already switching to trade in yuan, not only with China, but also with third-party countries. In May, reports surfaced that China has inked deals with dozens of countries to settle $582.3 billion worth of global trades in yuan and an effort to circumvent the dollar. Early this month, it's still true, early this year and month, Andrew Kostin, chief executive of Russia's second largest bank, said that the yuan could end up dethroning the dollar as China appears to be on the path of removing its strict currency restrictions. So, look, things change over time. All I'm saying is that the United States needs to shape up. And also, I'm just telling you straight up, decentralized money is better than centralized money, because decentralized money can't be tweaked by a nation state. It's code is law, baby. So interesting. Our headline here: Fidelity reapplies for spot Bitcoin ETF despite 2022 rejection. Story from Crypto Slate. So Fidelity first filed its application in 2021, but it was rejected by the SEC in January 2022, along with other spot Bitcoin ETFs. Fidelity Investments refiled its application for its spot Bitcoin exchange traded fund called Wise Origin Bitcoin Trust on June 29th. Fidelity first filed its application in 2021, but it was rejected by the SEC in January 2022, along with other spot ETF applications. To date, no institution has filed a spot Bitcoin ETF application, has received approval. However, a wave of institutional interest appears to have been sparked by BlackRock's spot Bitcoin ETF. Fidelity is the latest to join a spate of such reapplications sparked by BlackRock's own application earlier in June. As of June 29th, there are now 9 pending applications for spot Bitcoin ETFs submitted with the SEC. The other applications were filed by ARK Invest, 21 Shares, Bitwise, Wisdom Tree, Invesco, Valkyrie, and Van Eck. All companies' applications, excluding BlackRock, have been denied by the SEC in the past 2 years. BlackRock itself has a long history of ETF approvals, with 575 ETFs approved and only one ever rejected, which has made markets optimistic that this application too will be approved. The SEC has maintained that a product with direct exposure to Bitcoin is unsafe for investors because there are not sufficient guardrails in place to prevent market manipulation. However, according to Evolve's ETF Chief Investment Officer, Elliot Johnson, the key differentiating factor in BlackRock's application is a surveillance agreement that allows for its trading activities to be monitored by NASDAQ. This level of surveillance, Johnson claimed, is what can effectively prevent such manipulation. If you say so. If you say so. Courts have questioned the watchdog's reasoning in the Grayscale versus SEC case and called its logic flawed because it allows ETF based on Bitcoin futures. However, since the case has yet to conclude, it is unclear whether it will have an impact on the current stance towards a spot ETF. So this is big news because Fidelity is a big bank. They do a lot, or not big bank, big investment institution. They're like Edward Jones or Charles Schwab, right? There's a lot of money in there, and so if they allow that, a lot of companies too have the whole like 401k plans by companies with company match. And so a lot of companies having that, I think a lot of normal people could take their company matches and self-regulate it into Bitcoin ETFs so that they have some exposure to Bitcoin price action as well, as opposed to just investing in Johnson & Johnson and toilet paper and everybody's favorite products, right? So interesting. We're seeing a lot more of this type of story where things that didn't work a while ago, all of a sudden, just because BlackRock's like, all right, it's time for me to get in. Everyone else is like, maybe we have a shot now. And the funny thing is they do. So it seems like BlackRock's really showing off its power to influence large market direction activities. So just pay attention. I'm not pro BlackRock, but pay attention to what they do because you got to admit they know how to whale. Litecoin bull case grows stronger as hash rate touches an all-time high. And so this is about our little Litecoin price action here. There we go. There we go. That doesn't look stupid. Even better. 175%. Now you know. So Litecoin has been one of the most bullish coins for the year 2023, with anticipation around its forthcoming halving event. This has propelled the digital asset toward price increases higher than market average. And now, once again, the bull case for the digital asset is even stronger as its hash rate has risen rapidly to a new peak. And look. Let's get it. Let's get it. Litecoin of the moon. As the halving event draws closer, more attention is being paid to the Litecoin network. This has led to an increase in the hash rate of the networks as more miners are joining the network. Most of the month of June has seen large spikes in hash rate following the rise in the mining difficulty. And so, just to speak on that for a second. So, when you're a miner and the hash rate, you know, is kind of depressed a little bit, and there's a halving coming up, knowing that, like, look, if I put out, well, let's call it, if I put out, you know, 100 terahash, I'm going to get this much coin for that, right? After the halving, if I put out 100 terahash, I'm going to get half of that. And so a lot of miners are like, look, it makes sense. Before the halving, let's just jump on, let's get a big bag. And then shortly after it, we're not going to be holding it for long because it'll all of a sudden become a lot harder to get that much coin. I can sell it off, no big deal. It's a really small position to have to hold. And yeah, Grayscale Bitcoin opened almost touching $20. We'll take a look at that. Appreciate that. And let's see, Grayscale Bitcoin. I'll pull that up because I do want to take a look at how this conversation's playing into here. So this here is Grayscale Bitcoin, right? And yeah, it did do a run up. It looks like highest price it's got is 1960. So, but I mean that's a nasty run up, dude. Like from the bottom there up, like if you were a knife catcher, like that's 51% in a pretty short period of time here. So people should not be sleeping. If you got money in, traditional investments and you don't want to have to take a hit for realized gains, whatever, you can throw it in here. You can play ball a little bit since you know what's happening. So, and then the other thing too that there's no other thing too. I'm flipping back over to the story. We talking about this story over here. There you go. So as the halving of it draws closer, more attention is being paid to the Litecoin network. This has led to an increase in the hash rate of the network as more miners are joining the network. Most of the month of June has seen large spikes in hash rate following the rise in mining difficulty. So the rise in mining difficulty means it's harder to find a block, and as such, miners have to bring more machines online to increase their chance, leading to a spike in the hash rate. And as more miners are brought online, the Litecoin hash rate has touched its highest level yet. So that's dope. CoinWars is also a great resource for miner information. According to data from CoinWars with a Z, because it's gangsta, it's like beats with a Z. The Litecoin hash rate reached 958.36 terahash per second on Wednesday, June 28th, 2023. This is an all-time high for the network, with previous all-time high data around 800 terahash. So, yeah, that's pretty interesting. Hash rate has seen a decline and is now sitting around 735 terahash per second for the global hash rate. However, the spike points towards a more positive development for its network and its native token, Litecoin. It's not a token, bro. Look, I'm gonna slap some people who keep calling like proper proof of work cryptocurrencies tokens. They're not tokens, dude. Litecoin could surge upon halving event. The Litecoin halving, which will cut block rewards towards the 12.5 LTC per mined block to 6.25 LTC per mined block, is now less than 2 months away, as halving events have been known to impose a level of scarcity on a digital asset. A surge in the price of LTC is expected as the event draws even closer. We've been saying this a long time ago. The scarcity would see supply reduce, and if demand continues to rise, then LTC is poised to break $100 by the time the halving is done. $100, you think that's where it's going to stop? I mean, historically, has that been the case? What was our all-time high last run up? Yeah, it was a lot higher than $100. I think it's higher than that, personally. Like, it's gone up as high as $410. So This here saying it's poised to break 100. That's a very modest thing to say. Litecoin's rise in the hash rate already shows that miners are preparing for the halving, indicating renewed faith in the digital asset. As I think that means faith, indicating renewed faith in the digital asset. As for the next few weeks leading up to the event roll by, investors can expect LTC to trade in the green despite market bearishness. At the time of writing, LTC is $85 per coin, down 3.8 in the past week. So this was written just before we popped off. So that's funny. That is funny. And so, Litecoin, this stuff, like I said, it has some expectation. Like, you shouldn't be super surprised at this, but also don't freak out. I don't think this is a big flash in the pan. I think the price is going to rock a little bit. I think we're going to see some volatility. It's going to go up and it's going to go down, and it's going to be an easy day trade. So just if you do that, pay attention. Pay attention. Pump it. Do it now. Pump it. So MasterCard goes all in on crypto. Imminent launch of multi-token network product. More bullish news, right? Whoa. Got my Goku shirt on today because I'm feeling like that. MasterCard is set to launch its multi-token network, or MTN Mountain. Or Minton. Or Mittens, you never know. Product signaling the company's increasing focus on digital assets and blockchain technologies. Per the announcement, the MTN aims to make transactions within the digital asset and blockchain ecosystem secure, scalable, and interoperable, providing a set of foundational capabilities for efficient payment and commerce applications. MasterCard takes a big step into the crypto world. The product has 4 pillars of trust that aim to meet 4 key industry needs: trust in counterparty, trust in digital payment assets, trust in technology, and trust in consumer protections. As a trusted global payment company, MasterCard has years of experience developing standards and rules for its network, or for its card network, to provide a common framework for a community of users with shared interests. The MTN will draw on its experience to provide a common framework for regulatory compliance, prioritizing strong customer protections and stability. This includes a clear rule for the road of compliance with regulatory requirements such as anti-money laundering, or AML, and Know Your Customer, also called KYC, regulations. I think it's a big miss that KYC doesn't have a U in it, like know your, but spell like you are, because then it'd be cuck, and that'd be funnier because they like to watch what you do. So in addition, the MTN will leverage MasterCard's crypto credential, which offers a set of common verification standards and infrastructure, enabling trust interactions among consumers and businesses using blockchain networks. It will also support and complement efforts to enable regulated payment tokens to power financial applications and offer scalability of blockchain networks and interoperability among them. The beta version of MTN will be available in the UK. See, more bullish on the UK here. This summer, acting as a test bed for developing live pilot applications and use cases with financial institutions, fintech, and central banks. First phase of the applications will be powered by tokenized bank deposits, with plans to make the MTN available in additional markets around the world over time. MasterCard's multi-token network represents one of the company's most ambitious projects in the digital asset space to date. However, what are the potential use cases for investors with this new product? MasterCard's multi-token network use cases. One of the major applications of MTN is facilitating cross-border payments by using stable, regulated, and scalable payment tokens. This will provide a more efficient and cost-effective alternative to traditional payment systems, improving transaction times and reducing foreign exchange costs. The MTN also has the potential to provide effective identity management and permissions, enabling trusted interactions among consumers and businesses using blockchain networks. Digital identity verification will help in preventing fraud, improving security, and make it easy to find or to verify identities securely. Another potential application of the MTN is in supply chain management, where it can be used to track and manage supply chain transactions. This will help provide greater transparency and efficiency in the movement of goods and services, thereby reducing costs, improving logistics, and providing greater visibility into the supply chain. Tokenized securities are another area where MTN could prove useful. It could enable issuance and trading of tokenized securities, providing greater liquidity and accessibility to investors. This will help democratize access to investments and provide greater opportunity for individuals and small businesses. Finally, MTN could be used to secure central bank digital currencies or fart noises. As demonstrated in MasterCard's recent work with the Reserve Bank of Australia, RBA, and its central bank digital currency pilot, because Australia loves to treat people like prisoners. That's what Australia was in the first place. It was a prison colony for England. It could ensure that CBDC transactions are secure, transparent, compliant with regulation or with regulatory requirements. So, man, I feel sorry for some of the crap people have to put up with in Australia. Your government's out of line here, and quite frankly, any company pushing forth CBDCs, I think you should be careful of. Be careful, baby. Be careful. Um, and CBDCs are dangerous. They want to be able to force you to comply with government mandates that may not be constitutional. They may not acknowledge your rights and freedoms. And if you don't comply, you aren't buying groceries today. That's kind of, I think, the big plan here. So don't adopt CBDCs. Even if you stand to gain something from it, don't touch it. That is the fruit of the knowledge of the tree of good and evil. Don't eat that, for you will surely die. It's not good stuff. Overall, the MTN represents a significant advancement in digital asset and blockchain ecosystems, providing a secure and scalable, interoperable solution for efficient payment and commerce applications. As MasterCard continues to develop the product, new use cases will likely emerge, further expanding the possibilities for digital assets and blockchain technology. And so, cool. What you need to see here is normal people are going to be using crypto. What I'm wondering though, is this like under the hood, how is this designed? Because my guess is MasterCard holds on to the actual like the real cryptocurrency, and they give you some like ERC20 token on Ethereum or something that you can ask them to redeem for something, but they're probably not going to give you that ability. They're probably just going to let you treat it as like a token pegged. Like, hey, come over to the Ethereum network. You can get an ERC20 token that's pegged to the price of Ethereum. Of course, you can only use it with us, but it's pegged to the price of Ethereum. That's my guess is what they're doing. They're trying to, a lot of these centralized companies, they don't like the idea that you are peer to peer. They exist because they are a middleman. And so they have to find some way of using the same names that normal people don't understand and put themselves in the middle of the architecture. That way you're still forced to use them. And normal people will be like, what? I'm able to buy, groceries with it. So it's the same thing, right? But they're not understanding the sovereignty aspect of it. So yeah, just be careful with this stuff, man. Just know it's happening. It's going to happen at a high level. And you hanging out here on Crypto and Coffee, you are the person, probably in your friends and family, who's going to be most informed on this topic. So start having conversations about individual sovereignty with your family and friends. Be that annoying, you know, personal sovereignty evangelist, because people need to understand why this is important, or else they're going to get uh, exploited, and they're not going to know what hit them. It's going to get bad. Gundy, yo, happy Friday, baby. How you doing? It is a pump day. We got Litecoin pump and pamp it. And I don't think this pump is done, baby. I think this pump is started. I think the next week is going to be a little buck wild. So I might pop in with some shorts and just keep people up to speed on what's happening with Litecoin. But just don't sleep on it. Pay attention. Go to tradingview.com, get a Litecoin over USDT or Litecoin over USD chart up. And just so you know too, either use a decentralized exchange, Sushi Swap, Pancake Swap, that kind of thing, or it seems like Coinbase actually has the highest liquidity right now with Litecoin, and they have an ACH channel to be able to take profits into your bank account if that's your thing. So just note that, because Binance right now, they don't allow ACH because of their SEC lawsuit situation. So if you're a Binance user, just use Coinbase or use a decentralized exchange if you're going to keep it in crypto. And I know so MasterCard didn't give us details as to how this works. They just intend to build tools. So we'll talk more as this develops, because my guess is they're using tokens that they own, and they're asking you, hey, go ahead and send your crypto over to us, deposit it here, and then we'll give you this much token. And then at that point, not your keys, not your crypto. So it's their crypto, and they're going to give you some Chuck E. Cheese tokens for your gold bricks. But you can buy anything in their Chuck E. Cheese, reward store. I think it's going to work like that. Our next story here, yeah, stay frosty. And this is what you're talking about. Indo, I'm guessing you're saying like they know that they're becoming irrelevant since they're not in the middle, and so they got to rebuild themselves using different terms as the middleman. Yeah, we're adopting new tech, but really they're stuffing themselves in the middle of the relationship again. They're like, look, you can be married to someone else. Just make sure I have a camera in your bedroom. It's like, whoa, dude, freaking weirdo. I am posting a link. I appreciate that. I will read that. Revolut delists Cardano, Polygon, and Solana in the U.S. market. So the reason this is happening, these are not commodities. These are securities. Cardano, by the way, man, these guys are out of line. When I'm looking through articles, I swear these guys are paying a ton of money to have articles written about them to act like, yeah, we're just as relevant. We have tons of stuff happening, and all their articles are just like, could Cardano's price go to something something? Is Cardano about to release something interesting? And it's all like copy paste. Everything Cardano does is just taking other crypto projects and refactoring the code into Haskell. And their whole concept is, well, Haskell is self-auditing. And yeah, Haskell's cool for that purpose, but no one fucking codes in Haskell, dude. Like no one writes Haskell. And so because no one codes in Haskell, you're dealing with a really niche group of people. And the other thing too is that AI now adds a layer that does provide auditing on smart contracts. And so I get it. Haskell as a programming language is self-auditing, but every language is auditing if you have a, AI doing some of that proofing. So it's just, it seems like a moot point, and they're trying so hard to seem like a big deal. It's sad. Then you have Polygon over here, who's actually doing legit work, super cool. Solana doing good software work, but they're still a centralized system because their whole deal is they want to make sure that people who are using Solana and making tools in it are getting a good user experience. And I agree with this in concept. You have to make an environment that's ideal for developers to build useful tools. Once you've built useful tools, then that proves the value of your platform. So being Silicon Valley people, like they know what they're doing, right? I think they have good tech. I think it's just centralized right now, and so until it's actually decentralized like they say they will on the roadmap, I would just be careful and treat this more as a research and development space and less like a stable place to put things that are going to live forever. I think Polygon is probably the best smart contract supporting uh, network, maybe tied with like Cosmos Atom, because Cosmos Atom and Polygon are just crushing it with development. They have so many cool tools. So yeah, I don't know if you see the link. So I'm DMing you. Yeah, I don't see no link. So I'll take a look. There's my dog. There's my dog. You know. Okay. Yeah, I'll read this article next. Check that info. Thanks, dog. So let's read on here. So in an email sent to the US based users on June 28th, UK fintech firm Revolut announced it is ending support for three major cryptocurrencies. The company stated that US users will not be able to buy Cardano, Polygon, or Solana through its application effective immediately. They're afraid of the commodities thing. Or the securities thing. They're trying to only support commodities, I think. At a later unspecified date, users will no longer be able to hold or sell those cryptocurrencies. After that date, Revolut will automatically sell the tokens and deposit equivalent cash into each user's Revolut account. I mean, that's probably the right way to do it. I mean, that's a central exchange problem. The delisting only affects a small portion of the company's supported coins. Revolut currently supports more than 80 tokens. And real talk, people got to stop using coins and tokens interchangeably. They're different things. Like, I see a ton of people doing this. It's driving me crazy. A coin is proof of work. A token is akin to an ERC20 token. So a token represents some other value. It's like tokens are functionally fungible tokens, as opposed to a coin is the native currency of a blockchain for supporting consensus, right? Anyways, according to its website, at present, the new policy applies to users of the US Revolut app. The company is primarily a UK service, but has recently expanded to the US and elsewhere. Delisting follows high profile SEC cases. Revolut said it is delisting the above assets because of changing laws and regulations in the United States. Though the company did not specifically identify the SEC's ongoing cases with Coinbase and Binance, we know that's what it's about. Both of those cases names ADA, Matic, or Polygon, and Solana. So other exchanges and crypto platforms have delisted the same assets in recent weeks. Robinhood, which you shouldn't be using, announced it would delist ADA, Matic, and Solana on June 9th, while Bakkt announced it would delist those coins on June 16th. Revolut did not provide any further comment on its decision, but provides CryptoSlate with a copy of an email it sent to its customers. So, shout outs, Mike Dalton. Appreciate that. So, just know more FUDs going on with with these proof of stake coins. It looks like. And here's the article Indo was talking about. We'll go over this here. Yeah. I usually say project, right? Project is always correct, but that speaks to more like the whole effort in concept. Because really, mind you, the word token first popped up with Ethereum dropping ERC20 tokens. And so ERC20 tokens kind of allow you to make fungible tokens that can be redeemed for other things in a centralized way, right? So, like I could have, maybe I literally have 100 Chuck E. Cheese tokens, and I say, okay, cool, I'm going to make 100 Chuck E. Cheese tokens on Ethereum, ERC20. Those are tokens. Those are not currencies, right? or coins. But if I mined 2 ETH, I have 2 ETH coins. Those are coins, right? So it's yeah. Altcoin sell-off are scheduled for July 1st. This company readies to sell 215 million in cryptos. Interesting. So as the crypto market holds its breath, one company is ready to drop a bombshell that could echo through the corridors of digital currency. That's dramatic. Let me read this more like a movie guide. As the crypto market holds its breath, one company is readying to drop a bombshell that could echo through the corridors of digital currency. On July 1st, Celsius Network, a now bankrupt crypto lender, plans to sell off a staggering 215 million in altcoins, marking an unprecedented liquidation. It's like that. Impending sell-off is set against a larger regulatory crackdown on crypto in the United States, which could result in a ripple effect in the market. Altcoin sell-offs underway. This financial maneuver, orchestrated amid a stringent regulatory crackdown in the United States, will see Celsius Network converting a wide array of altcoins to Bitcoin and Ethereum. Celsius will be selling all altcoins from all customers except custody and withholding and withhold accounts starting July 1st, and we'll be converting them into Bitcoin and Ethereum. I mean, that's good for Bitcoin and Ethereum. That just means people are being forced to basically buy Bitcoin and Ethereum, right? These altcoins slated for sell-off include, this is a nasty list. Thanks for pointing this out. Celsius, Polygon, Cardano, Chainlink, Litecoin. Really? You're selling off Litecoin? That's proof of work, dummy. That's stupid. Polkadot, Bitcoin Cash. I've also seen bully stuff on Bitcoin Cash because it's proof of work too. Aave, Binance Coin, Uniswap, Stellar Lumens. This is owned by IBM, by the way. Solana, EOS, which used to be dope and no one talks about now. FTX token, which you only had if you got scammed. And Serum, which you only have if you have good hair. With investments on Celsius Network's plan, crypto enthusiasts are left pondering the fate of their investments. A key question is how the market will react to the pressure of this enormous sell-off and if it will lead to altcoin crash. I don't think it will. I think there's going to be shown a dividing line between proof of work and proof of stake coins. I think that's what's going to happen. Impact on specific altcoins, investor sentiment, and broader market trends is an uncertain in as what the hell? The impact on specific altcoins, investor sentiment, and broader trends is as uncertain as anticipated. If you say that 10 times fast, it's quite difficult. I reassure you. Will the altcoins crash? Celsius Network altcoin portfolio features several significant assets. Among them is the Celsius token. Celsius Network's native token, valued at approximately 70.5 million, is the largest. Yeah, they don't want to be holding securities, whatnot. Brother, I appreciate that so much. Have an effing awesome Friday, everyone. Stay frosty. If you're in the U.S., happy Independence Day. Yeah. Happy Independence Day. We got 4th of July coming up here. This year's not been kind to Celsius, with its value plunging almost 80.8%. Therefore, the upcoming liquidation threatens to push it further down the slippery slope. The million-dollar question on investors' minds is how the sell-off will influence Celsius's future price trajectory and overall sentiment surrounding the token. So I just wanted to bring up this news. So much happened in the crypto market that we sometimes forget. Dude, for real, dirty shovel gang all day. So it looks like a lot of these tokens are just being dumped, and I don't think that's going to happen for a long time. I think it's going to whale it, though. That's my take on this. So thank you, Indo, so much for bringing that up. I appreciate that. So, want to encourage everyone to be safe out there. If you're going to drink, don't drive. Be really responsible with that. Also, make sure that you do take this weekend to just be appreciative for the freedoms we have, right? Like this whole Independence Day thing really has like a energy to it that like we are sovereign individuals. We should be holding our own coins. We should be taking responsibility for our own selves. We should be watching out and caring for our neighbors. And I think that really is the essence of, the Independence Day in the United States. So happy Independence Day to all my American brothers and sisters out there, and to everyone who's not in America. I hope that you know the same freedoms we do. And until next time, keep calm, huddle on. We're gonna jam out a little bit, and I'm gonna look at some more Litecoin stuff. So we're gonna hang out, but let's go ahead and get some shake therapy going on. We doing that? We doing that? What Gundy said is right. Stay frosty, baby. Oh, yo, I don't know if you see that, but I seen it. No, it went away. There was a little A. It was auto. There it is. The C down here, a little A, there's a little L. The A is auto fit. It changes to an A. It only shows up if you change the resolution on the side. Now I know. If you're using the full blown trading view app,